Well, investors have been watching all the developments very closely indeed, as indeed has our business editor, Kate Moody. Hi there, Kate.
Hi, Tom.
How are the stock markets reacting to this rather ambiguous situation we're in right now?
Well, surprisingly well, really, despite all this uncertainty. If we do wind up with a contested election that drags on for several weeks, that's unlikely to last, though. And indeed, we have seen Wall Street paring back some of its earlier, much sharper gains just since the Trump campaign said that it would be asking for a recount in Wisconsin, raising the possibility of dragging out the final results a little bit longer. Still a pretty strong session there, as you can see, with an hour of trade to go. We got the Dow Jones Industrial Average up around 600 points this hour. The S&P 500 paring back from 3% to 2.5%. The Nasdaq had been up as much as over 4% earlier, down slightly there. That tech rally being driven by the likes of Uber and Lyft. We'll be explaining why in just a few minutes. Earlier, though, we spoke to Craig Erlam, analyst at Oanda, about the unexpected optimism on the markets.
I think it's not the worst outcome as far as these markets are concerned, but the worst outcome is still plausible, and that is that this carries on for weeks and goes to the Supreme Court and is fiercely contested. I think a victor is the preferred victor, an uncontested victor, if you will. Trump, we've seen for the last 4 years, is very favourable as far as the markets are concerned. Stock markets love low taxes. Stock markets love growth ambitions that Trump favours. The stock markets like lower regulation. And so I don't think it's necessarily Biden that the markets prefer. It's a clear-cut victory that will not be contested and will not be dragged out. We have enough uncertainty in the world right now. We're going into a major second wave of coronavirus. We need leadership. We need clarity. And that's something that a contested presidential election doesn't offer.
Okay, senior markets analyst Craig Erlam there at Oanda, speaking to us about this unexpected optimism on the markets. Now, Kate, the developments there obviously getting investors wondering if, there will be winners and there will be losers as far as the various American industries are concerned.
Yeah, a lot at stake, of course. We're just going to delve into a couple of them here. We'll look at the car industry, for example. It's grappling around the world with the transition towards electric or hybrid vehicles. Joe Biden has said that he would impose stricter emissions targets, which could put them under pressure. He could also, though, provide funding for car makers to make those changes. Donald Trump, a bit less engaged, it's fair to say, on emissions standards, but he has repeatedly attacked U.S. car companies closing factories in the U.S. or importing car parts. Both Trump and Biden have vowed to cut drug prices, which could put pressure on the pharmaceutical industry. The incumbent president has, in fact, signed a number of executive orders on the subject. They've had limited concrete effect over the last years, though. A Biden administration, meanwhile, would likely increase government spending on healthcare, which could boost the healthcare sector there. Well, the tech industry, meanwhile, facing tight scrutiny no matter who wins the White House. Questions on antitrust and competition issues under a re-elected Trump and privacy protections under Biden. Tech companies are also closely watching relations with China and the Trump administration's crackdown on Chinese technology, which has in many cases made it hard for them to acquire parts or software. The fate of TikTok, the Chinese video app, which Trump has threatened to ban, will be closely watched no matter what. We don't quite know how Joe Biden might approach it if he's elected. Trump could also change his mind, as he has done in the past, if he maintains the White House.
Okay, another issue on the ballot in the state of California was about the so-called gig economy. Voters handed a victory to platforms like Uber, it would appear.
Yeah, they approved what was called Proposition 22, which essentially overrides a law that was enacted last year saying that ride-sharing or delivery apps do not have to treat their workers as employees. Now, it means that drivers and delivery workers of companies like Uber, Lyft, and Deliveroo will continue to be treated as self-employed or independent contractors, and therefore they won't be eligible for a guaranteed minimum salary, paid sick leave, or employer contributions to health insurance. Uber and Lyft in particular had lobbied heavily in the run-up to this referendum. It was one of the most expensive ballot measures in California's history, and we've seen their shares jumping as much as 15% earlier in the session. These, of course, questions that are being asked in cities around the world, and this California referendum could set a precedent not only for the 500,000 gig economies workers in the state, but for millions more people across the country. It's one of the things, of course, it's not quite the headline that we're talking about today, obviously. We've got this, the presidential and congressional races still up for grabs. But this was a huge issue that could affect the future of the economy in California and beyond.
Yeah, it's something we forget sometimes, isn't it? That the ballots do have an awful lot of other issues on them apart from who people want to be president. So that was the example from California. Thank you so much, Kate Moody, our business editor. Well, the rest of the world is